Hi guys, Marty with Options Unleashed. Welcome back. Today is Tuesday, December 29th, 2020. Only a couple days left. Markets are closed, only 2 days left in the year. Gonna go over basically today's action and some trades that I have on. Let's see, today's spiders looks like still pushing up against that uptrend. We had a big morning big opening this morning. As you can see, the spiders opened up huge. It looks like we were off to the races. And then we saw this huge whoosh down. There was some unusual put buying activity today, and the spiders drove the markets lower, kind of spooked a lot of investors. And then it kind of trended sideways today, and then did kind of an up and down here at the end of the day. Kind of interesting. One thing of interest on this graph that I saw today, if you zoom in, the spiders kind of held this line right in here at 370 at one today, about 135, 235 in the afternoon, and kind of bounced back. And then we had this nice. We finished on this nice like little hammer candle here, which is actually good, kind of a bullish move. We didn't come back down. We didn't break this trend, and we stayed above it, and it looks like it tried to rally. That's all they can get out of it today. So that's good news. If you notice here, the reason why we kind of look at the major indexes first is kind of want to get a sense of where the market's going. It looks like it tried to break through this trend, and then either there was some program selling or a big whale got in and basically decided that they weren't going to let the spiders get above that trend line. As you know, we've been talking about this larger trend, this daily trend being an ascending wedge, and it could be setting up for a bearish trade, a bearish sell-off, after earnings season, which is kind of right during earnings season, if you will. It coincides right with earnings season, so not too happy about this. So I guess the overall kind of scenario for options here is just be careful in this market. We could still go higher, but at some point there's going to be kind of a decision made. Either we're going to spike higher and stay above this trend, or we're going to come down and retest some of these lows down in here, like the 340 areas. We might even just get a small sell-off, which would spook investors down to this area, the 50-day, or we could go as low as the 200-day. Just be really careful in here. In terms of being directional, it might be a little tough in here until we get kind of some resolution. Taking a look quick at the stock playbook today. So major move that we had followed by a large put volume on the SPYs. Looks like somebody bought 16,500 of the January 29th 360 puts. So that trader was bearish. So we did have overall puts outpacing calls today. If you take a look at the spiders, and we can take a look at in Thinkorswim, when you go to do an ad simulated trade, you can come down here and take a look at today's option stats. So you can see that there were 2,200,000 puts versus 1,100,000 calls. So you can see the put call ratio was 1.8. There's where you get that bearish overall sentiment in spiders today. So somebody stepped up, obviously, and took some big put options. And you can also see it in this chart where Thinkorswim in the option time and sales tab, it allows you to take a look at the biggest trades today. And then at the actual, every single trade is underneath this section. So there's two sections. First section is talking about the largest call and the largest put. So the largest, it looks like the largest put in here was 110,000 of the January 270 puts. This wasn't the issue this morning. This looks like a neutral trade. This morning it was more of a bearish put, so this could have been a bullish put spread late in the afternoon. This was somebody closing out a put spread at like 5 cents. So this wasn't necessarily the put that we saw this morning. It was the other. It was the other one that we were talking about. It was the 16,500 of the 360 puts. I think John Najarian talked about it on CNBC today, or I don't know if it was his brother John or Pete. I think it was John. But anyway, so that's where the S&P is. We knew it would run up on the 600 stimulus yesterday, and then we knew it would back off based on the fact that it would pass the House, letting the air out of the balloon. Then now it's up to the Senate. We know the Senate is going to vote it down most likely, but now the real risk and volatility lies in the Georgia runoff Senate vote. So if people are upset about the lack of votes that the Senate comes in and votes this $2,000 per person, you know, that could mean bad news for the Georgia runoff voting. I think it's January 5th next week, or 2 weeks next week, which means now you got some volatility heading in, and so it all kind of coincides with what we're seeing in the markets, with the ascending wedge and the earnings, and then also the Senate vote. So you're going to see some volatility you expect to see the volatility rise. You can see that the VIX in here kind of spiked in here. If I look at a 5-minute chart on the VIX, it was up all day, kind of came down at the end. But it's a major spike in the VIX today. So the VIX is still kind of in that downtrend, but we don't really know based on next week. Next week, you could see the VIX coming back up, and you can see that sell-off that we would expect. At some point, there's going to be a sell-off, and then probably continued strength as the kind of the overall theme here is that the markets, traders need to factor in the $500 per dependent as well, times 2 for divorced couples. So this is actually very bullish. So basically what normally would happen here is, you get the sell on the news, and then people start to digest the news, and the news is overall good, right? There's still a $900 billion package for the relief. It's not enough, but it's good news for Apple, Ulta, retail. It's not enough for the reopened stocks. It may trade sideways for a while, and the dollars will just kind of go back into the haves, but not the have-nots. So you're looking at growth and FANG, companies that are continue to kind of take advantage of companies that, frankly, are struggling. You're going to see those guys continue to grind higher. Value might trade down or sideways on the fear of a grind taking longer than expected. So the gainers today, we saw Snap, Intel, Netflix, Amazon. I'm long Snap, Snapchat. I have Snapchat. It was up today 6%. I think Goldman recommended this to 60 today. So that was a really good move today. I'm just continuing to be long Snap. Here's my trend lines. I would expect it to, eventually kind of come back down on this side of the trend line, but it can stay on this side of the trend line for quite a while. Long gold, and then everything else on my long list today were kind of didn't do too well. It wasn't a great day overall. In terms of the ETFs, you can see the VIX was up 6%. Emerging markets kind of did well. Gold, GDX, Qs, and then everything else down on the day. Spiders, the banks were down. Home builders were down more. Retail down even more. IBB, biotechs, the value play, the Russell was down, got killed. Not necessarily killed, but down the most. And ARK Invest, it looks like people just sold ARK today, sold all of the ARK stocks. A lot of the ARK fund today was sold. Let's take a look at the watch list here. So, and then back to the playbook. So looks like good day for Snap. Intel, basically there was an advocate They're advocating that Intel pretty much, and it's kind of interesting, kind of good timing, right? So Intel has been struggling lately, as everybody knows, with AMD eating their lunch. I had put in here a note to watch this down to 44. I wanted to buy some at 44. Figured there'd be a lot of tax loss selling late in the year. So we have 2 days left of tax loss selling, but today was a big up day. It was up $2.32 because there was a letter to the CEO saying you should consider strategic alternatives for your shareholders. Pretty much that means they're unhappy with the performance. There's a bunch of speculation in terms of what can Intel do going forward. The likes of Apple, Qualcomm, and others are making AMD making their own chips. They're kind of in trouble in terms of their ability to come out with lower cost chips to compete against the likes of AMD. Now Apple's making its own chips for their processors, and Qualcomm as well. Just the relationships are still going to be there. And even like Apple announced that they're no longer going to use Qualcomm chips. So the relationships will be there for a couple of years, but those are kind of dwindling because those are basically have term limits. Those relationships eventually expire. So that's where we are with Intel. So I would like to see this one a little lower, maybe back down to that 44 range. Before Amazon, the big kahuna, everyone's still focused on Amazon. It broke out in here yesterday, and today I think it let a little doji, I guess, going on right on Amazon today. And again, we talked about this in another video that we could see a fake out in here. We can go higher and then kind of come down if you're looking at this diamond formation. If you're bearish on Amazon, if they miss on AWS, they're obviously not going to miss on retail, but if they miss on AWS or they, they're in they could be in a spending cycle. If they announce anything in terms of overall revenues or guidance next year, you can see this thing sell off. It's highly unlikely. I think a lot of people are set up for a bullish play. So what I had thought was thought that we would see the downdraft, head fake down here, and then just a move higher on earnings. So there's still plenty of time. You don't have to chase this. I did put a play in here just because of the breakout. I put a call butterfly on Amazon, kind of show you how that looks here. So what I was doing here with Amazon, I was targeting the December 31st, end of the week, 2 days from now, kind of move up. Today it was actually doing pretty well, but then it kind of sold off. So this is more of just a chase trade. I put up just a very little capital, $2.40. I bought 2 contracts. I'm sorry, $1.40. Bought 2 contracts, and looking at just to see if I could get a rally. I was hoping to get that 100-point rally back up to the 3,400. So what I was targeting here was the rally up to this area right in here at about 3,400. We can still get that tomorrow. So if we get that tomorrow, I'll take this off for a nice gain. I didn't think it would keep going, but you can see here, if I take a look at Thinkorswim and I put in the, if we look at the Thinkorswim date range on expiration, I can pull up the chart and I can set it to the 31st, and you can see it's right at the edge of that 1 standard deviation. So I'm thinking between now and Thursday, you can still get this run up. Especially if we got that $2,000 Senate vote, it would have definitely run up. But so this was just a kind of a flash in the pan trade, just to try to take advantage of that breakout. Nothing special going on in here, but you can see kind of what my thought process was. And in terms of option trading and kind of like the playbook, what I did here was I went small. I only put on 2 contracts. I'm only risking $2.40 or $240 um, total. But I was, I was planning if it moves up, I'm going to take this trade off easily where it'd be a double or triple. And it was only a 3-day trade, so that's kind of the rationale behind that. I'm still undecided on where I think Amazon is going to be in terms of how I want to put on an option trade. We'll do a future video on that before earnings. So I think we have plenty of time on Amazon. I think it can easily move up right before earnings. And then, the expected move on Amazon is probably like in the $350-$60 range, maybe even $400. So Amazon could probably could trade up and then back down to right around here where we get the pennant and that resolution either to the upside or downside. Nobody knows which direction, but it can easily get that $300-$400 move back to 3,600. Or if it's at 3,600, it can easily move higher. So I think a lot of traders are setting up for this move higher. A lot of call activity in Amazon. If you take a look at the action in here, you have 390,000 calls. So your calls are outpacing your puts, 2-to-1 here. So a lot of stuff going on there. So Amazon, the number one trade that I also have on for next year is Ulta Beauty. Let's take a look at Ulta. So not a lot going on today, guys. Ulta wasn't a good performer today, down 83 cents. It was actually down a little bit more, I think. But it was up great yesterday and it spiked. And then I guess it felt like it was down by more because it opened up at 282. It came all the way back down at almost a 7.8 point swing. And then closed up down 0.83 cents. So it broke out of this trend here, which is good. That's the little day trend I have here. But I think it has to probably either retest this, test this trend line and then go higher, or just hopefully just stay above it. I'm planning on, it broke this longer trend and now it broke this daily trend. So I think what you got to want to target here, guys, is about 250 on the short term. You can take a shot at it. There's your line in the sand. But I also, on a longer term, you can look at that 220 level, 225 level is where I think you're in pretty good shape to take a shot at options in here. That 227 is where you got this this trend over here, which is kind of like an upside down head and shoulders neckline, if you will. So I like Ulta Beauty. This thing is really bullish. And the reason why, we went over this on the video the other night, the reason why we're not doing anything with it yet is we want a little bit more volatility. We've got implied volatility here is 39%, 42%, for 17 days out. February now, we're probably going to look at a February trade. We've got earnings coming up on 3/11. I already sold into weakness the other day. I sold the 215, 225 put spread. So if you take a look at where I can see my break even on that one, and that was for March, I've got an 83% probability of profit for there. It was down today because volatility spiked a little bit. Vega makes it look like the trade is worse than it is, but yesterday it was actually up really nice. It's staying away from that lower put strike, and so I feel really comfortable in here. Like I said, you can, worst case in here, you can get that one standard deviation move all the way down to 225, 220, and I think you're really safe. So I like this trade on any down days like that. I use limit orders all day long. That was good news, and I'll continue to do that. Like I said, I don't know, going back to the chart, don't know when I'm going to put on that earnings play, but you have to be targeting that 225 area, because you can see, I think Ulta can quickly move up, even on bad news. If we get it back down to 225, I think it can still quickly move up to that 366 level. So another thing you want to just look at is if this thing breaks this area right in here, um, if it breaks this trend line right in here, you want to be, this is your green, you want to be bullish on that trade. So there's a lot of traders that will trade horizontal lines. This thing, as soon as it moves above this level, it's off to the races because there's a big gap here, right? So we're talking at least 324, and then next stop is 363. So we could do some Fibonacci and stuff like this, but bottom line is bullish on Ulta. You just have to pick your spots. I'm already long the stock. I'll buy more on weakness all the way down to that 225 level, and we can play some options trades, but let's wait until earnings. Earnings, like I said again, are going to be on 311. You got plenty of time to come up with some earnings plays. If we do get that bounce down or that chop down to fill this gap in here at 222, you could easily be selling premium on that stock all day long down under 200. I don't think we'll see under 200 this year unless there's some major bad news. But you got to think about Ulta. You got to think about Target. Target today. Let's take a look at the playbook. Target today shutting down its e-commerce beauty business. So this could be a deal with Ulta if we bring that up. Can I open that in a window? Yeah, there you go. So like Target to sell its e-commerce beauty subsidiary for $350 million. So they talk about this could be related impact to its recent, could be related to its recent pact with Ulta Beauty, which see 100 outlets open inside Target locations. So if they like this deal, and obviously they roll it out a little bit at a time, they could be kind of limping in here to Ulta and kind of using that as strategy to just have Ulta take over the whole e-commerce side of the business. You never know. Or they could be making a play for Ulta outright. You never know there either. So again, my number one pick, you want to be, I'm in the stock, and what I'm going to do is be patient, pick opportunities in terms of where I want to be. I think this is actually a better play, honestly, than Amazon, and I would be a buyer all day long on any weakness of this stock. The only competition is Sephora, and Sephora I think is with Kohl's. I think it's Kohl's. So I don't really see any real competition there. It's a lesser play. Target is the premier play. Besides Walmart right now, and especially with e-commerce and a store within the store concept. So you have to be bullish about this relationship. So what else did I did? I put a limit order on SPY for protection. Didn't get it off, but I put some protection on spiders today. I wanted to sell I wanted to buy a put fly on spider, but I didn't get that off. We won't cover that in this video, but I did add a Roku bearish play as well. Here's what I'm looking at for Roku. I did this late in the day. I was looking at Roku, how it's got this little downdraft in here. So Roku is holding this trend line, but then just broke this kind of short-term trend line and kind of retesting it. And this big candle right here, looks kind of negative to me. And Roku was down a lot today, right? Or yesterday and today. So it actually followed through today. Looks like it closed slightly down. It was almost a doji. But to me, it looks like Roku's got to test this trend. I know it's like ARK Invest is probably the second biggest holding, but I don't like this. It just moved from this breakout and never looked back, never took a breather. I think you got to see a little bit of a breather back to that trend line. So what I was looking at a trade. Let's analyze this. So right now I wanted to target that one standard deviation move out to February. So the February 5th weeklies, um, this is an unbalanced put fly, and I do a lot of these trades where you're putting up, a defined risk um, amount of money, but your return can be fairly large, and it's a very directional trade, right? So here I'm not selling options, but I'm buying premium. I'm buying the 255, 275, 300 February 5th um, put unbalanced butterfly, um, uh, and it's a bearish play, and it's also unbalanced. If that Roku breaks that trend and keeps going down, you're still going to profit on the trade. So that's something that you have to be, that I use a lot. Is I noticed when I use butterflies, one of the things that's really hard about a butterfly trade is that sometimes if you're directional, you could be right and still lose on a trade. But if you're using unbalanced butterflies, you can be right in the direction of the trade, but if it still continues in that path, you'll make money. You'll still have a profit. So I thought that Roku would actually come down here and retest that trend line, like we said, around that 270 level. So I'm comfortable right in here, even getting it to I was targeting kind of on the low end, that 290 level, which is still a decent profit, all the way down to that 275 level by February. Another way to do, now you might say that like this is still spending $500 to make, let's say we sell it at 50% profit, it's 2200. It's still a pretty risky trade. You're spending $500 to have to wait a while to get this thing profitable. But you can take it off at any point in time in here. The other thing that I wanted to do was, this is a limit order, right? So I'm targeting a $2.50 trade, which is, I'm good with that. Two contracts at 250. And another thing to do to go with this trade, if you want, take a look at this now. If I uncheck this, I can take a look at this trade now, which says I wanted to sell the February 5th, the same expiration, the 400 405s. So that gets me, like, if you take a look at this, slices the break even, that gets me out to almost a one standard deviation move, 81% probability of profit. I sell four of these contracts for a max loss of $1,500, but for a max win of $480, which helps me pay for that $500 butterfly. So it essentially gets me to like flat to a free trade, and so a free trade, and but kind of like the profits, obviously to the downside, no risk until you get to about $400 a share in the stock. But I could run it all, if it ran all the way up to 380, I would probably shut it down. That means it just doesn't, it's going against me, and this thing is not going to actually come down. So above this 360, if the stock is above 360, right in here, we'll just draw a line here. That would be my stop on this. So I'd put a red line here saying, if above 360, this thing is just not going to cooperate. I'll have to take another shot at it. But if you're willing to look at this trend here, this gap that we've got, where it has to come back to trend at some point, I'm targeting, just the fact that the good news is all in. And we did see some selling in ARC today. It looks like the NASDAQ 2 was down this morning, although the Q's finished up. It looks like there's just going to be a lot of shifting. I think you're going to see a lot of profit taking in some of the names that have just run up so much, and they're going to want to take profits and lock those in early January. So, even if it moves sideways, I'm not really hurt by this, but it moves down just a little bit, I can still profit quickly, with the, if Gamma can help in here big time, where if the stock moves quickly, I can actually just take some off. I can take these contracts off and close out the trade, and just leave my my put my call credit spread in place. If I get 15 $15 move, I can easily shut this down for 50% of profit as well. So that's not a bad way to play it in here. It just all depends. And again, I'm not in the trade. It's just a limit order. So those will sit, and we'll see if those can fill this week. Um, in terms of what I did today, I did close out Zoom for a profit. I bought back my Zoom 450, 460 credit call credit spread that I had put on the other day. I think this was even just less than a week. I bought it back for 25 cents because, again, don't get greedy. Zoom was getting basically got crushed yesterday. And then today we just had volatility, a little bit more volatility crush. So I basically got that limit order off at 25 cents. There's no, you don't have to sell your spreads at a certain, probability of profit. Don't try to always get 50% exactly. Buy them back, when you can buy them back. You don't buy them back when you have to buy them back. So I took an opportunity to just say, you know what, I need the premium. I need that margin back so I can sell something else, right? Or I can buy something else. So if I have a 50% or more, this was more than 50% profit in Zoom, I don't want to risk, this company could have a buyout announcement tomorrow. If I could lose that $2 like quickly on a news headline, I don't want to risk, I don't want to risk that. So that's where you take your profits early in option trading. This thing broke the trend line here. And so it's basically a sell in here, but I didn't want to risk it at this point. I already made my profit from here to here. It was a quick profit, and that's what we do with the option trading. I could come back and revisit this if I want to, or I could have crafted up another trade, but I just wanted to shut it down and use the premium. So let's see what else we did today. That's about it for today. Yeah, the Roku trade we covered. That's about it. So the things that we're looking at for the rest of the week, we have 2 days left to trade. We're going to continue to just let our longs run. We're going to look at potentially some protection in the spiders. So here's my protection play on the spiders. If for some reason they want to take this down, I have a $2.50 limit order, so putting up 2 contracts at $2.50 would be a $500 max risk, and targeting that 350 area for the 19th of February. So if we have any headline risk with the Senate, with the Georgia runoffs, with the blue wave, with any of that, you want some protection in portfolio. If you look at the way I look at it is, I go backwards. I look at what do I want for protection. I wanted to have like at least $2,000 of protection for, it's an insurance policy, right? This is a hedge against your longs. So instead of selling your longs or selling your, you got some call butterflies going on, and I'm long call butterflies and Win and some other names. I'm long Marriott right now. If I want to protect, and Snapchat and others, right? I want to protect those longs with any kind of big drawdown that we get in the spiders. If we do get that drawdown, I want about a $2,400 or $2,000, right? This is about the halfway point, 1,700, but I would like to see about a $2,000 protection there. So I'm willing to put up $500 to get that $2,000 of a protection. And again, it's an insurance play. I don't want to have this payout. That means all my longs would probably have to suffer a little bit, but that's what you do if you need protection. Right now I'm Delta positive, like I'm Delta bullish, I guess, in the market. I don't have a lot of trades on right now that are bearish. So, and that's not necessarily all the time. I try to stay Delta neutral as much as I can, but this week I'm probably just a little more bullish than bearish. So I think because of that spook this morning where we had those huge trade, somebody buying puts, maybe it's like a Ray Dalio, or maybe it's some huge whale, or it could be Warren Buffett, just buying protection. They're buying protection, so maybe it's good opportunity for us to buy protection. There's a number of ways you can do it. You can buy puts, you can buy the triple or the double ETF, SPXU. the triple inverse ETF. You can sell calls. You can buy. In this case, what I did was I thought buying an unbalanced put butterfly was the best way to do that. So that's the trade I made for protection. So we're going to be looking at Ulta this week and next week, thinking about some options trades in here, but we're long. We want to get more long, and we want to take opportunities of high IV to put on some options trades in either the rest of the week or next week as we get closer to earnings. So have a happy new year if I don't see you guys or make another video. Have a great happy new year, and probably see you next week in January, and we'll be looking at all these options. Take care. Thanks, guys.